Hello everyone and welcome back to Sudden Wealth. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that like and subscribe. As you guys know, it's the only thing that I ask. So this week has been volatile as expected, as we covered this over the weekend. There's going to be a lot of uncertainty. We have stocks opening deeply in the red, shifting to closing on the green. Then it's just so funny to see the headlines, right? So you go on CNBC or on the Financial Times and say stocks are selling off due to the tariff threats of April 2nd, and then by the afternoon it's green. So what happened? Did the threats disappear? No, they're just reporting. Once again, they're just reporting the color of the chart. That's it. Sorry to break it to you. Sorry to not be the most appealing of comments, but it's what happens. It's amazing. So you mean to tell me that between April 1st morning and April 1st afternoon, all of a sudden all the tariffs went away because the charts end up green? Yeah, I don't think so. We're looking at TLT. The bond market keeps on rising. That's good. It seems that we're trying to retest that 50 weekly moving average. That's very important. It would be great to get above it. That's around the 92.2, but it would be good to see it, to break it, and decisively break it, not just break it. Because what we want to avoid is another false breakout like we had a while ago that basically brought TLT all the way down to the 80s, to the 86, 87, etc. Now, am I a big enthusiast of bonds? Do I think bonds is great to trade or to be an investor of? No. But I do understand that the bond market dictates all the other markets, as it serves as collateral, is the number one collateral for all the business activities that you see on the planet. So if that market is very unstable, and basically if yields are spiking, that means that it sucks liquidity out of risk assets, and maybe not on the same day, but within some delay, which means then it impacts stocks and crypto alike. That's why you don't see a bond market dropping 5% a week and the stock market rallying like there's no tomorrow. There's a reason for it. The dollar has retraced part of the move down it was having. So basically, it tried to go above the 20-day exponential moving average. So far, it has failed. What we want to see is a continuous move down after the dollar had its bounce, and we should now be going into the lower hundreds, potentially even below 100. So that's something that we want to see. So we don't want to see. So basically, what you're seeing is the dollar index has retested the 200 weekly moving average, which is very important, and so far it's above it. But we want to see it crack down below it, obviously, as the dollar comes down. That's the equivalent of multiple rate cuts in the liquidity markets. Other good news. Not a lot of people paying attention because it's all about the tariffs now. But the Eurozone inflation has come down quite a lot. So if you look at the Eurozone inflation, it's now 2.2%. Germany came softer than expected. France came softer than expected. And Spain came softer than expected. Now, these are some of the largest economies, and also in the UK, it came softer than expected. So these are some of the largest European economies, which means there's a very good chance, and it's already started to be priced in. Further rate cuts by the ECB are now expected. Trump is also pushing for rate cuts by the Fed. Let's see what the Fed does. We have the job market data coming Friday, and then we have CPI next week. I have a feeling that CPI has a very good chance to really put a good number, meaning substantially lower than expected, and I think it will surprise quite a bit of people. If you look at TRUFLATION.com, the US inflation stands now at 1.38%. If you think about it, shelter, which is a third of the CPI, has been steadily coming down. Gas costs are at 4-year lows, and even eggs, which was pushing the prices all the way through the roof, are now down 60+%. Now, I do understand that people in the US are still struggling in terms of inflation, by the way, people in Europe as well, people in Asia as well. So, I mean, maybe Europe as an exception, which is Switzerland. The worst month of inflation in Switzerland throughout all this period since 2020 was 3%. So Switzerland is really a special case, but I do understand that inflation is something that is affecting everybody. Will we see prices coming down, meaning deflation? I don't think so. I think the way forward is if the US manages to reduce the deficit enough, and if it gets some money from the tariffs, I think the idea, the way that you make the Americans able to live better, is not necessarily by bringing prices back to 2021 levels or 2020, but rather to give them just more money. So if you have massive tax cuts driven by savings in the government with Doge plus some revenue coming from the tariffs, that is more interesting, meaning, okay, the prices remain high, but now your salary is 35% higher. So I think that's the end goal. That's my feeling. Maybe I'm wrong. Obviously, AI and technology will always push prices down naturally for many things. And I think, to be honest, people will learn to live with less if that really comes to that. So tomorrow, I do expect some volatility once again, a lot of volatility. I get the feeling that when the dust settles, not necessarily tomorrow can be a very red day or something like that. It's perfectly possible. But I get the feeling that it's more important that we see a resolution to this issue and that we have some certainty. So basically, okay, this is going to be how it's going to work. These are going to be the tariffs. These are going to be the countries. This is going to be the goods. Okay, now I can work with this. What I cannot work with is tariff on the Monday, no tariff on the Tuesday, triple the tariff on the Wednesday, no tariff on the Thursday. We cannot go like this. And I get the feeling that a lot of trade deals will be done sooner than people expect. That's something for a different story. Then you see another reinforcement by BlackRock in terms of tokenization of assets and securities. You look at some of their digital team, and they all believe Ethereum will be the most likely chain to be used for tokenization. Once again, the price of Ethereum is extremely low. And I've said this before, I get it. Ethereum has been underperforming dramatically. There's no question about it. Ethereum has been a complete disappointment. No question. Let's not try to pretend something different. It is a reality. What I say is this. If you fade Ethereum, you are fading BlackRock and Trump. And that's your decision. I cannot tell you what to do because then I'm giving you financial advice. In my view, I don't think it's sensible to me personally to fade BlackRock and Trump and most of investment firms, etc. They're looking at Ethereum to deploy some of their applications. That's me. If you think that's stupid, and if you think that these people will be wrong, then you can fade Ethereum. So what I'm trying to say is this. Whatever you believe in, it's your decision. You just need to understand what you're deciding about. That's it. Well, as I've mentioned before, the liquidity conditions improved and financial conditions improved quite a bit in Q1 2025. We should be seeing that now in Q2. Can it be more mid-April? Yes. Can it be immediately right now? Also possible. Can it be a little bit later in April? Also possible. It's somewhere around this time frame. If we don't see that, then for the first time we will be breaking out of the liquidity movements with the lag that we were expecting. 2017, I think April to June marked incredible time for crypto back in 2017. So I'm very curious to see if that is indeed the case. Now there's something that is bearish and that needs to be addressed. ISM came out at 49. As you guys know, above 50 is expansion, below 50 is contraction. I said, well, I would like to see it above 50. but at least let's see it in the 49s. Let's not see 46, 45, 47. That's very far away from the 50. Let's have it close by. Taking into account all the uncertainties, all the tariff pressures, and all of the things, and all of kind of stopping of the economy, let's say, with all this uncertainty, I think 49 is not necessarily a really bad number. It's not great, so let's not pretend that it's bullish, because it's not. And what I'm trying to say is that it's not the worst thing. As I've told you before, I am sitting on my hands during this time period. It's extremely volatile. You can get killed, particularly with leverage traders, get completely annihilated in this. That's why I don't like it. So I prefer to sit on my hands. And if I do see huge sell-offs in certain coins, like for example, I saw Andy below $30 million. So then I accumulated there at 28 million something. I saw Hoppy going into the low 8 million market cap. So I accumulated over there. Basically, I've been trying. I have already enough Pulse X, Hydron, ICOs, as you guys know. I have a lot of it. So now I'm trying to catch some of the coins that I think will do very well in other chains, particularly when they go very, very low. I got in also kind of a joke coin in Solana, which is called S-Coin. And my idea was the following. Titcoin did incredibly well. And I thought, And this one already had 1.5 million market cap at some point. And I saw it at around 350, 360K market cap while Titcoin was moving higher. And I said, I get the feeling that enough clowns or enough degenerates or enough degenerates in the good sense of the word, may give this one a push, particularly if Titcoin keeps on doing very well. So I said, okay, I'll drop $600 at 360K market cap. Last time that I checked was around 800K market cap, so far so good. Not a crazy gain in the sense of it's not like turning $600 into 60,000, but let it run. Let's see what happens. A lot of underlying things in the crypto market are incredibly bullish, and they're way better than I could ever hoped, let's say 2 years ago. The regulatory support, the new head of the SEC, the support by the US president, the investments by the UAE, the investments in Saudi, China warming up to the idea, Russia using it for payments, etc., etc. It's basically, and of course, European Union always against it. They will always be left behind. They want to roll out their own CBDC, basically full control, zero privacy. We decide who gets money and when, who has done something good or not, who we froze the assets, European style of control, once again behind all others in the planet. Now, one of the things that nobody addresses about all these tariff talks, etc., is that the Saudis will invest $600 billion over the next 4 years in the US. The UAE has pledged to invest $1.4 trillion over the next 10 years in the US, etc., etc. I think the foreign direct investment in the US now totals around $3 trillion, many of them to escape the tariffs, but many of them also for the improved regulatory environment and for the improved expectation of business friendliness in the country. Unfortunately, nobody's really paying that much attention to it. This is some of the things that will be very important in the next 2, 3, 4, 5 years, but they are being planted and happening as we speak. Once again, all these wonderful things happening within crypto, people are not paying attention because the prices are not yet reflecting those improved fundamentals. In a few weeks, I expect everybody will be saying, of course, it's at these prices. Look at A, B, C, and D, and E, and F, and G. And then you're gonna notice, oh, well, wait a minute, but we know about that since February, March, January. Yeah, but nobody paid attention because the prices were coming down. So now we have the board is set. The conditions have improved. The fundamentals are better than ever. And now we will see the unfolding of the game. What people will fail to realize is that the pieces and what's going to allow us to go to the heights that I think we're going to go are already in place today. But people don't believe it because they don't see it in the price action. And look, maybe I'm completely wrong. Maybe all of this means nothing, and maybe we go straight to zero. That's the question you need to ask yourself. Not me, not Somi, not Ivan on Tech, not Anthony Pompliano. No. You have to answer that question yourself. And with that, thank you very much for your support, guys. Really appreciate you guys following, liking, and subscribing. I'll catch you in the next one and have some fun in the Liberation Day. As I've said myself, we'll be sitting out any of the craziness, and I do expect quite a bit of volatility to come. And with that, thank you very much, guys, and I'll catch you in the next one.